Asia-Pacific markets rebounded on Tuesday, tracking gains on Wall Street overnight as investors turned their focus on the Reserve Bank of Australia's interest rate decision. Australia's S&P ASX 200 climbed 0.96% ahead of the RBA decision. The bank held rates for a fifth consecutive meeting at 4.35%. Over in Japan, the Nikkei 225 rose more than 1% after plunging almost 2% on Monday, while the Topix was 0.4% higher. On Tuesday, Reuters reported that Bank of Japan Governor Kaz-uo U-eda told the country's parliament that the central bank could raise rates in July, depending on the economic data available at the time. Meanwhile, automaker Toyota has re-elected A-kio Toyoda as its board chairman, disregarding two proxy advisors' recommendation to vote against his re-election. South Korea's Kospi climbed 0.84%, led by gains in chipmakers Samsung Electronics and SK Hynix, while automaker Hyundai also hit a fresh record, gaining about 3% on news that it plans to list its India unit in Mumbai. Overnight in the US, the S&P 500 rose to close at a fresh record as Wall Street looked to build on last week's gains. Let's get more on this now with independent market strategist Mike Ingram in London. Great to have you with us, Mike. Now, Australia's central bank has kept rates on hold for a fifth time. What's the current economic climate, and can we expect a rate cut this year?
Well, it's quite a difficult situation that the Reserve Bank of Australia finds itself in, and they've made this very clear in the accompanying statement. When they decided to keep, as you say, rates on hold. They're talking about, in their own words, persistent inflation. They're bemoaning the lack of progress they've made on the inflation front and hitting the RBA's target range between 2% and 3% inflation. Since the end of last year, they're talking about relatively sluggish growth. The Australian economy only grew by 1.1% in the first quarter, but they're still talking about persistent wage inflation, persistent low productivity growth. They're hinting actually that the budget deficit in Australia's rather too high, and the balance of fiscal and monetary policy is wrong. But of course, it's not politically correct to say that. So they're in a difficult situation. If you look at the markets thinking right now on rates, they seem to be assuming there's probably about a 60% chance of a rate cut in Australia by the end of this year. And a rate cut is not fully priced in until March or April based on futures right now.
Right. Over in Japan, there have been reports that the central bank could be raising rates very soon. How likely is that in your opinion?
I think it's a distinct possibility, and Governor U-eda made it quite clear that that is on the table for July. I think that, again, the backdrop is quite mixed. So on one hand, you've seen the inflation in Japan be above target, 2.5% for over 2 years now. So certainly on that alone, they should be thinking about raising rates. However, growth, again, like Australia, quite sluggish. There was actually a contraction in the first quarter. I think that what you're likely to see is them being very data dependent. You've got 3 data points between now and the next meeting at the end of July, which is you've got the May and June CPI numbers and also the July Tokyo numbers. Now, you get the first of those data points on Friday this week. So let's see how that goes. But as I say, at the moment, I would say probably an outside chance of a July cut, dependent on those 3 data points. But if we see those moving up towards 3%, then they'll go in July.
Right, Mike, and we're also seeing US indices reach fresh records in recent days. What's driving that rally?
Well, it's interesting because you saw last week the Federal Reserve, again, keep rates on hold, but also significantly downshifted their own expectations where interest rates were going to go, the so-called dot plot. And the market is pushed back very hard against that. The Fed said, we're only going to get 1 cut this year. Market had a bit of a think about it at the end of last week and said, no, we don't believe that. We think the income data means that we're going to get probably 2. And that's where the futures are pricing in at the moment. You're also seeing, I think, a feeling about higher geopolitical risk. market's quite worried about forthcoming elections in France. And I think that's also helping flows into US risk assets such as equities.